went up. And so the two things canceled. So in a sense, the bubbles never existed because they cancel each other. So they leave the power law. This is why you have a white line in the middle of these bubbles, because it's almost like telling you the up motion cancel the down motions, and you're left with the power law. The power law is still valid even when there are bubbles. But if there are no bubbles, you have even more of a power law. Right? You are following the power law even more. In fact, there are all these parameters, like this parameter called the correlation parameter, R square. And that parameter is becoming stronger, not weaker. So I don't get it. I mean, I think people think that this blue line is the power law. But the blue line is what they called from the beginning the full model. That means we take the power law, we studied the deviations from the power law, and then we make an effort in describing them by using the power law. But they are not belonging to the power law. It's actually when we deviate from the power law. So I don't know why people still confuse this. Now, the only thing you could say, if you zoom in, right? So if we zoom in on the recent, so first of all, it is clear that what we were expecting, so that we were moving along, and this shape of a curve is not exactly what we were going to expect. It's just a kind of a marker to say if everything happened like it happened in the previous cycles, we should go to 200K. It was never a guarantee. It's a second layer. You understand? There is the backbone, that is the power law, and then we say, well, there are these other irregularities, and maybe these irregularities will continue to exist. They are at a different level of prediction than the power law. The power law is the backbone. Now, you could say that, while until recently, we were kind of simply oscillating around the power law by small amounts, now we see a relatively big deviation. Now, this is still in the realm of what is possible, because if you look at this deviation, when we went back to the power law, we went above, we went below. And so we are not even as strong of a deviation as this one that occurred in August of the last year. The one that we had around April, this is when actually things started to seem strange, because usually, what should have happened is that we cross the white line in November. That is actually what I predicted. I say we will have a bull market starting in November, and it happened. We cross the white line, and usually we stay above a white line. It never happened that before in the previous cycle that we actually go back to below the white line once the bull market starts. But we had that, and in fact, you could use that as a kind of a measure of how strong a deviation can be. At that time, it went all the way to 75 something. But we went back to the power law, and then we oscillated. And now we see oscillations that are different from the ones that we had from May. So starting May, we simply went like 5% up, 5% below. We were very, very close to the power law. But now the deviation is bigger, right? Now, even just visually, you can see that it's bigger, but it's not even in the order of what we experienced when we went to 75 during April of this year. So, what I'm expecting is that we are going back to the power law. We will continue to oscillate. And to break the power law, we will have to have much bigger deviations. They need to be there. We have many different ways. Maybe next episode we can show. I will do some tests. Right now we have this way of looking at not just the price, but also the change in price, what are called the returns. And we can see if the returns are statistically very different from the average, right? It depends, of course. If you choose a very small period, it looks like, they are very different, right? But if you choose a bigger period, then just There are normal deviations that are expected. So if to break the power law, we will have to have deviations from the power law that are big and then consistent in time. Now remember, it's difficult to say. Sorry if I take all this time. I want
So,
to let Marcus discuss, but it's a long time we don't talk about these things. One big question is, if we didn't have a bull market, right, where we had a big deviation, because if everything happened like before, we should have had this bull market. We reached 200K simply because there is a decay of these peaks, and then we will have gone down, and then experience a bear market, and the bear market bring us all the way to this white curve. And that will have been, first of all, it will have taken a year, so it will have to happen sometime November of next year when we reach a bottom. And the bottom will have been around 75, between 75 to 80, something like that. And it will have taken 1 year to go there. But, that will have been going down from 200 to 280. So that will have been more than a 50% decay, Now, the question is, if we don't have a bull market, do we have a bear market, right? Was it a muted bull market and then we have a muted bear market? This we don't know because we never had anything like this. We will have to monitor. So right now, I will say we are still riding the power law. I'm expecting that we go back to the power law and we are doing oscillations around the power law. We will have to see. It's the only scientific thing to do, given that basically we are in uncharted territory. We never had this behavior at this particular point of a cycle. In fact, actually, in general, if you're thinking about, if you're looking at the data, we didn't spend a lot of time in the white line. Yes, the white line represents the middle, but usually we simply crossed it, and then most of the time we spend it below or above the power law, the middle power law. And this has been unusual to be so close to it and oscillate around it. So right now the power law is stronger than ever. It's not dead. What is dead, quote unquote, and we don't know if it is dead or is sleeping. Maybe next cycle we have a normal cycle. We don't know. Some people say, I want to make one more comment. People say, oh, it's an extended cycle. It's a weird concept because cycles means predictability. Okay, we can have this debate, like, for example, Plan C is one of these people say, oh, it doesn't have to be a fixed length. It's nonsense. Think about seasons, right? Imagine if we had a summer that happened 2 months later, 2 months early, and it's not at a particular time, right? It will be a mess. You will not talk about cycles. You will not know the beauty of the seasons, that you know exactly when they start, within some variability, right? When they start, when they end. If they don't know, then you cannot say that we have cyclic seasons. It's nonsense. If a year lasted 2 years and then 1 year and a half, and say that, how do you know that you are in a cycle? You know that you're in a cycle because there is a sequence of events that repeats at precise time, like the cycles of Bitcoin. If they last 6 years instead of 4 years, how do you know when the cycle ends or starts? You say, oh, because we reach a certain peak and then we get down. Okay, Bitcoin reaches peaks. Is this a cycle, for example? This was a peak, this was a bottom. Why don't you call this a cycle? It doesn't make any sense. So we need more data. We need to see what is going on. Right now, if anything, the power law is the only certainty we have, because this is something that Bitcoin has followed. The cycles, in a sense, were an illusion because we went up and we went down, and there is this overall trend. If you average over 4 years, the power law is the only thing you see, because the bubbles almost disappear. So that is the only backbone that we still have, and then if anything is stronger than ever. Anyway, so this is all what I have to say. You guys, can ask question in the comments, etc. If you have question about this, you can. So I would like to give the microphone to Marcos that will talk about liquidity. Ed Marcos.
All right, I'm ready. Okay, can you see my screen?
Yep.
All right, I'm glad to be back with the camp. We're back in business here, guys. It's been a while. I think Giovanni was hanging out with the Pope at the Vatican, so he's back. All right. So,
That,
so the
that is
first thing,
next. That is next.
yeah. So the first thing we want to do is take a deep breath, and when in doubt, we zoom out. Right. One of the problems that we have as retail and ex-retail and small traders is we tend to look too narrowly and we don't look at the big picture. We're swimming in a big ocean and we're just a very tiny piece of plankton. We're not even a shrimp. So we have to understand how big the ocean actually is. So let's zoom out. We're in doubt, let's zoom out. So the first thing we want to do is we want to take a deep breath. Yes, the market has done a pretty strong correction off the all-time high, but that's part of the market behavior and the natural course of action. So the first thing I want to do is we're looking at the power law runs on cycles, right? So we're talking about the full bull and bear cycles. So let's take a step back and let's just look at the cycle for what it is. We're still in this gigantic cycle that we've been in for 360 something days now. And here it is right here. There's the big macro cycle. So we recently in July we deviated from that cycle, and there's the deviation, and we were running in that cycle, that deviation for 100 days. So a long time we were in this deviation. We had a small deviation for about a month and a few days in February, and it lasted till April of earlier this year. So that was a deviation to the downside. That was the spring low. So if you take a step back, we've just been operating in the big macro and we had a deviation outside of there. That's all that's happening. Okay. So there's a couple of things that I want to highlight here is there was this gentleman named Wyckoff, and he came up with this theory called a composite operator. What that means is the market has lots of commercial or institutional participants. And these participants fall in three major categories. Somebody's got a lot of noise going on. They're moving furniture or something. Uh, so if they could kind of mute that mic, I'd appreciate it. These commercial institutions are the ones that have the money that actually move the market. So these commercial participants fall in three major camps. The commercial participants that actually need to buy futures or derivatives to protect price stability. We're not going to talk about those guys. They're the commercial speculators, the banks that actually buy the asset to earn interest and they profit or get collateral value from its movement. The commercial speculators, and then the institutional basis traders. So those are the two we're going to focus on really quick. I'm not going to take all day here. So we're going to talk about the basis traders, institutions, and the speculator institutions. So having said that, the market loves to do business. You have to be able to identify current markets. The market loves to do business in a range. It makes sense. If you were buying derivatives on commodities, you need price stability so you can conduct business. So the market loves ranges. These ranges is where it conducts its business. Institutions don't like volatility or crazy directions. That's what they're trying to hedge against. They are always seeking, especially the basis trading institutions, which is the majority of them. They're looking to stay delta neutral. They don't want a lot of exposure to direction. So that's why these markets tend to range for long periods of time, because those institutions are keeping it there, because they're here to conduct business. They conduct their business off of volume. Retailers and small degenerate traders like ourselves, we're the ones trying to hit home runs and we're chasing price movement. but that's not what the institutions do. So let's take a look at two things really quick. I want to go over the basis traders first. And we're talking about major institutions. So, for example, this was a major short liquidation that occurred in 2024. So, if you're a basis trader, you're not trying to get appreciation, you're just trying to keep it in a zone. So, you pick up this inventory and you offset that inventory in the same vicinity down the road. These are shorts, you offset it with longs, and you keep a balanced basis. The basis stays balanced. Everything's good. So another aspect of the basis traders or institutions, where do they do it again? So now you're even, your portfolio is even, and you're staying in range, you're staying balanced or delta neutral. The next opportunity for you to do another basis is here. When we broke out right here, you picked up a lot of short inventory in your portfolio. You rebalance that by coming over here at a later date and settling that off those books, and you rebalance. And the derivative of that is keeping a tight range. So now basis traders picked up short inventory, they offset it with long inventory here. And that's where we are currently. So if you really think about it, in the eyes of an institution, they're just doing what they do, right? So let's look at another thing. So let's look at the speculating institutions, the banks and the ones that need price direction to move, right? So these guys pick up inventory here on this liquidations and this correction that we had, this major pullback in the spring, and then they offset it here, right? You pick up long contract inventory, you offset it with short contract inventory. So now you're balanced. So what do? You pick up short contract inventory and you need to offset it with long inventory. Then you'll do the same thing again. So the point that I'm trying to make is the two biggest pools of institutions, there's hundreds of institutions out there, and they become they become one composite operator when they act in groups. So the basis traders are doing their thing, and the derivative is a range. And then the speculating institutions are doing their thing, and the basis is also a range. So they become a composite of each other. So the market is doing exactly what it needs to do. So let's look at one last thing. If you were a speculating institution and you're picking up inventory here and you're selling it off here, then you're waiting to pick up fresh inventory to do the same process again. So where are you going to get that inventory to offset these locked in buyers up here? Well, you pick it up right here where we are now, back to the same old range where you were comfortable doing business. And the problem is, us retailers, we start panicking. This is just normal process. So for example, if you look at this major range here, this is the fair value that these institutions want to trade at. So if you, for example, some people I see on YouTube, oh, I'm going to start buying Bitcoin here or there. You shouldn't even think about buying Bitcoin till you get below fair market value for Bitcoin on the spot side. So that's in this area here. This is where the institutions are going to pick it up, and that's where you should pick it up, because the market has already told you where it wants to trade at and what the prices are. We don't set the price. The market sets the price. You just got to learn how to read the sheet music that's in front of you. So I'm not going to get too much in the weeds tonight. I just want to kind of throw the main point is we need to take a deep breath. If you were an institution and you were a speculating institution, you picked up inventory here and you sold it here, you've only made two major trades in the last year. In a year, you haven't done anything. You bought here, you sold here, and you're starting to accumulate again to sell here. That's all that's happening. We're going through an accumulation phase that should terminate somewhere in this structure right here to take up here. As I've been saying all for the longest time, this is fried chicken. It's got batter on it. The grease is hot. It's ready to go. The market's not going to leave all that inventory unmitigated, unsettled. So just sit back, allow the thing to run its course, and take advantage of it. So that's what I have for today. I try to compress about. I haven't talked to you guys in about 4 weeks now or more. So try to get a lot in a little bit of time.
So you see a correction upwards in which kind of time scales?
I think it's going to stay. All the institutions are saying that we don't have the 4-year cycle anymore. I believe that. I'm a believer of that. I think we're right on track power law. We're staying close to that power law, which it just proves the institution model is even more correct. Institutions want ranges, and the power law is the basis for the range. So we're just staying on it. I would expect to mitigate this probably. We're looking at the end of the year to come back up here. So yeah, we're still fine. The good thing is when the markets move, they move quick. When it does move, and then it'll rediscover a new zone. Because institutions, when they take it up here, they're gonna want to settle it down pretty quick, and they will. So yeah,
I like that. I think you're right.
Yeah. I just follow. Hey, I know what I am. I know that I'm a plankton. I know that I'm not a shark. I'm not a barracuda. I'm not even a barnacle on the belly of a whale. I'm something that barnacle eats. I know I'm small, and I'm going to swim with the big boys. Whatever the institutions do, I'm just going to stay under their little flipper, and that's
like the pilot fish, right? That, clean the sharks.
Yeah, the pilot fish swims under the belly, but even the pilot fish would be a pretty sizable institution. I'm that thing that's swimming under the pilot fish's belly.
So, a little parasite on top of the pilot fish.
I'm a pilot fish's parasite, exactly.
Yeah. Very good analysis.
Yeah.
Okay, right. that is good. Now, Sebastian, do you want to, or Costa, do you want to go ahead and discuss the behavior of the algorithm? In particular, I was very happy because when we had a correction, my algo bought almost perfectly the dip. But let's see some other examples of this.
Guys, hear your mic. Is it muted? Maybe he's muted.
Oh yeah, they are muted.
They're muted.
I'm muted.
Yeah. Okay. Can you hear me?
Yes.
Yeah. I did want to go over just one of the a question for Marcus actually. So
yeah,
are you saying that we've been in this range from 100 to 120? Are you saying that potentially? So there's one or two scenarios, right? The one thing that sticks out to me is the power law support. That's something that we really focus on with our risk management, and the power law support says that we should come back to around 72K towards the end of next year. Is that right, Giovanni?
Yeah, but that was my big question, right? Do we even go there if we didn't have a bull market? I mean, that is a valid hypothesis, right? This is why I don't like speculation, but if you do a scientific hypothesis, like, okay, usually the bear market were associated with the bull, they seemed almost to...
Just leave it at the door, mate. That's all right. Thank you. Sorry, I got a postman.
They almost serve a role of compensate the bull market, right? But if we don't have anything to compensate, that is the bull run, do we have a bear market, right? Right now, I think nobody can answer that question.
And I agree with you too on that, Giovanni, because
sorry guys,
the institutions, they're running closer to that power law because institutions they damper the volatility. They're the ones that kill the volatility. Right. It's the speculating retail that creates all these bubbles.
Yeah, it makes a lot of sense. I thought I was thinking about this exactly last few days. Like, it's possibly that simply the institution simply cannot live with an asset that changes by 80%. We had in the past, and that in either direction. Because the moment that even these two pair, maybe that is all. If we had a two pair. Almost remember, these are not people that believe in a cause; they believe in money, right? So the manager of ETFs, etc. If a Bitcoin went up very quickly by a factor of 2, they will sell. They will sell because they think about the bonuses that they will get at the end of the year. So yes, the only thing we can hope is that it continues to grow because the system grows. Adoption grows, all the fundamentals have not changed, but this euphoria that we had during the bubbles is going away. That is actually, I don't, to be honest, I don't mind, because the entire point of what we working hard, that is this system, right? That our trading system is all about recreating mini bubbles, because anytime you have a change, any change, it can be a 5% change in either direction. In fact, actually, when you have big changes like the one we experienced in a few days, that is an opportunity to buy big, cheap Bitcoin. And the price will correct up, because this is what it's going to do. It's going to find that equilibrium state, and it oscillates, and we take advantage of that, while most people don't, because I never understood the fascination with the bull run if you were not going to act on it. Why the only thing is because I think there are some people that every time we have a bull run, they think this is it, that we are going to have an exponential behavior and the bull run is going to last forever. And it's never like that. It's actually correcting. And if you don't act on it, it's almost like you didn't have a bull run, because it's compensated by the bear run. So really having something that continuously oscillating around the reference value, it's perfect for what we're doing. This is why I was eager for you guys to show. Do we have some charts of?
Yeah. Let me show something. I got something really cool to show you. Actually, I did a little bit of.
Show that
It's more clear.
in 25 minutes.
Yeah. Do you want to just share my screen there, Gio? All right. So I just wanted to bring this chart up because we can see the liquidity here. And what I've done is I've matched it up, and I've done a little bit of drawing with what our algo did. So I've added the blue here, so I've kind of tried to just replicate it by hand. So what you can see
we should be able, eventually, we should need to figure out how to superimpose Marcus charts.
Yeah,
because I appreciate your artistic effort. But if we could do it the right way, it would be really cool.
Yeah. So, but what you can see here is,
you know what? Ask Madis to use his editing skill to do that, because it doesn't have to be a live graph, right? It can be
correct. So, the point we're trying to make here is that discretionary trading is almost impossible when the market is moving in this way. A lot of these liquidity pools as well, they're building in live time. Like if we have a look here, what's going on, this pool here, we have a look here, this didn't exist a few days ago, right? So this is there, the 6th of November, it's the 7th of November, not even a full 48 hours, right? And these pools start to form. So what's going on is that you can start entering trades, this and that, and very quickly it can move in another direction. So the smartest way to trade in a market that is 99% algorithmically driven is to have your own algorithm, right? And that's what we've developed at Minotaur. And you can see here just how well it tracks the market makers' movements. What's particularly interesting is how it survived two of the biggest liquidation events. This one here was 1.1 billion. This one here was 19.9 billion.
And sorry to interrupt you, because I was actually reading about that and kind of wondered, how we sleep well, when there are these crazy liquidation events, because we are not going to get liquidated,
And not only survived, actually thrived. It nails those
It's incredible. It's incredible. Yeah.
And what's really nice as well is you can see this is an example of walking the price down. So we don't want to short Bitcoin. It's a very dangerous thing to do, right? So we want to make money though when the market goes down, and we do that this way. So we entered here at 121, 122. You see here we took profit at 116. So the market's gone down. We're long only, and we're actually able to make money. And then we reset the deal. Now we're able to enter at 113. The market's gone down again, and we're able to enter, actually take profit at 114. It's almost exactly the same, but our average price down is down at 109. But what's really cool about this is, I'm trying to make this point, is, where does Giovanni's work comes into this? Well, where it comes into is that we're able to walk this price. Let's just say hypothetically that this is going to go all the way down to the power law. We use, the wick-off cycle is going to give us eventually some rallies. When we get those rallies, we take the opportunity to close the deals, enter new trades. As you can see, simply like this, we walk the price down, and then eventually we walk the price back up. Right? This is how the algorithm essentially works. We can walk it down to 0 and all the way up to 1 million. and it's just going to be behaving and taking advantage of the volatility. Sometimes it can be a bit flat, and we have people thinking the bot's broken. Here's a good example where nothing's really happening. You can see this kind of this band where we're neither taking profit or entering new trades. It's a little bit boring. However, when the volatility and the chaos erupts, look how well we're able to handle it with very, very little margin. People are getting destroyed and blowing up accounts, and this is just like a walk in the park. So, yeah, maybe Sebastian can add a little bit more to that, but that's how it's performed. We're actually extremely happy how it's performed. The biggest liquidation event in crypto Bitcoin history. And I think some of the accounts that I'm running had around a 15% margin utilized. So, it's really a safe.
And it's crazy because, it just shows really how leveraged the market is. I mean, back in the day when we used to have really massive liquidation events on crypto or on Bitcoin would need to drop by 30 to 40 to 50% in value, 60% even to see that. But this time we had the largest liquidation event in history with only an 18% drop in price, which is really interesting. And it tells us, obviously, we have much more allocation of funds entering the market, but it also tells us that more than ever, the market is highly leveraged. For the single event to happen on an 18% dip, to me, was remarkable. And now I also think we're in this interesting territory where, it's hard for me to feel bearish on Bitcoin when, we're in extreme fear right now and Bitcoin's price is above $100,000, which that's never happened before, right? Which is another interesting kind of metric to pay attention to. So I think, really at the end of the day, what we're seeing happen here is the traditional kind of flip. And I talk about this often, and it's that the problem with retail is there's no conviction, and that plays directly into the market maker's hand. And it's very easy for them because they know every time Bitcoin's price falls, everyone's scared and everyone's bearish and everyone has fear. And every time Bitcoin's price rises, everyone's bullish and everyone feels good again, right? And there's greed in the market. So if you just zoom out and look at how this psychology plays in, there's a reason the liquidity feels the way it does. And what happens is when the market's down, everyone goes short. And what that means is everyone that's short is eventually going to lose. And Marcus, can talk on this, but the point is most people don't realize that both long and short players lose in this market 99% of the time. And what we're seeing now, and I guess why we have so much conviction that there's still room for Bitcoin to go up, is the fact that there's so much open short interest in the market. And when there's a lot of open short interest in the market, it's very, very rare for price to capitulate without that getting taken out first. And Marcus, I know you can touch on that, but if anything, if we're going to go down, it's going to be after all the short liquidity gets taken out. You know what I'm saying?
Yeah, the market is it's a rebalancing engine. It's constantly going to take both sides. It's going to harvest both sides all the time. And it's just like any other business model that feeds off that. Sports betting, gambling, casinos, it's always going to take money from both sides. No directional side wins because the basis of how these markets operate is to continually to wipe out both sides. So you need to have a tool and operate like the institutions that have the game fixed, how it operates. So that's what we do.
Exactly. And, don't forget, guys, like Marcus made a really good point on this show. So I see so many people, what's happening? Is the power law dead? Is Bitcoin dead? Guys, we just hit all-time high. We literally just hit the all-time high. So having a correction after price hitting all-time high, that's not something that's new or unheard of. This happens all the time, right? And what's interesting, don't forget, when did we hit all-time high? 3 or 4 weeks ago? It wasn't that long ago, right? Maybe 4 or 5 weeks. When we hit all-time high, remember what's also happening when you hit all-time high is all the short players have lost, right? Every time when that happens, everyone that was short in the market is now lost. And what do you think happened when we hit all-time high? When Bitcoin hits all-time high, that's when everyone starts going long. So to see a correction after all-time high, all that's happened is they just took out all the short players. And guess what they've done now? They've just taken out all the long players. And there's a lot of open interest in the market now, short, which gives us an indication that, it may not happen today, tomorrow. You may not put a timestamp on it, but one way or the other, the market doesn't leave that there. That's not how it works. They're coming for it, right? We may go down to the low 90s first, but even then, I'm not willing to be bearish on Bitcoin until I see that get taken out.
I mean, all-time high is a retail term. That only matters to retail. There's no. Giovanni said it best. I mean, what difference does it make if you're not going to take advantage of it? I mean, there's going to be a million all-time highs. It's never going to be the ultimate all-time high. It changes all the time. And that term is relative to nothing and anything.
At the same time, I will say, we found the all-time high as the meaning of showing Bitcoin anyway over time goes up. And in fact, it's a very interesting thing. It's a graphic I need to show. I already did it a few times, but I will do it again because I think I will make a very strong point. You could organize all the prices of Bitcoin from the smallest to the highest, right? And then the highest will be the all-time high, and it will be today, right? So I'm going to sort all the data points. When you plot that thing, it's a power law. And in fact, it's a power law without bubbles. It's a power law without bubbles, because in the end, the bottom line is this backbone behavior that follow this long-term trajectory. That is the reality of Bitcoin, and there is no evidence. It's not guaranteed. There is nothing guaranteed. If it was guaranteed, the potential for investment, potential for growth, will be zero, because that's what happens. It's a balance between risk and reward. But if it's right now we have an asymmetrical knowledge. The people that follow the show that are still a minority, because there are other silly shows that have maybe 10 times more viewers. This show is asymmetrical, gives you asymmetrical alpha. And on top of that, the tools that we have give you asymmetrical alpha. So it's an elite of people. We don't mind to be elite. It's good. But in the end, the knowledge is that, it's a fact. It's all what we have, because anybody else, all the other stuff that people use all the time is meaningless. This is true stuff. All these analysis the tools that we have, they work. They are solid. They work.
It's a good point. I wanted to add as well is that there are a lot of people talking about Bitcoin and analyzing Bitcoin, but we've actually build something that trades it based on our philosophy and our understanding of it. And that tool we actually offer to people. If they book a call with us, we can, they can come on board and become part of the program. And that's very unique. I don't know any other analysts out there that actually have a tool that can trade their philosophy. We are putting our money where our mouth is.
Yeah.
And we've all brought something to the table in building that strategy. And the last missing piece was Giovanni and the power law. So, it is shocking sometimes to see how small these shows are when we're not only analysts, but we also provide them with a tool that can trade based on that philosophy as well.
Exactly.
So I think we just, I do think this show and this team is going to get bigger and bigger, because I think we really do have that alpha and edge that a lot of people don't have.
Yeah. So please, guys, there is a link here where you can watch a very nice webinar that we put together. By the way, talking about webinar, we are working now in making at least once a month invite-only webinar where we will go more in the details on how the algo works. This will be for people that are really interested in the algo, because we want to keep the show anyway about Bitcoin behavior. We use all these tools and we show you what the algo does, but we don't want to make it a commercial for the algo. But for the people that want to learn, want to understand, we will have a webinar. You will still learn a lot of things, because we will go more the technical details. We will give you examples. We will answer any questions, but it will be invite only. We will advertise it, so you will know when it's going to happen. You can send me DM if you want to be invited to this webinar. But for now, you can watch this webinar. There is the link that is scrolling right now.
Yeah.
Bottom, and book a call with the team and try to learn more. Study this thing. Don't trust anybody. Don't trust me. Don't trust the team. Just understand. Go deeper, and see if this is a tool that maybe can help you.
Yeah.
Anyway,
sure.
we can. You guys want to add anything, or you want to comment on? Because we can go then to the questions. Otherwise,
Yeah, let's go. Sebastian's going to be off next week. He's getting married. He's going to take a few weeks off. So
okay,
it'll be probably the three of us doing the show. So
yes, it'll be great. Everybody was waiting for Marcus. Where is Marcus? What is going on? What happened to Marcus? We want Marcus back.
I'm in the house.
Yeah,
I'm
okay.
They don't want fake Marcus. They want the real Marcus.
So is the power law toast? What is happening? I already commented on this. The power law itself is that white line, and in fact, I will say the white line, the support line, that neither of these are violated. We have not been violated. Some people, I've seen some people showing the graph with gold, Bitcoin versus gold, because everything is a power law. You can use gold, you can use oil, you can use real estate, power laws. The only difference is whenever we talk about that support, we never say that there is an equivalent support for gold, because gold can change relatively to the dollar, can change, like we know that what happened, it changed a factor of few. And of course, that this support, it's about 60% relatively to the center. So if gold goes up factor of 2, by the way, is nothing, because Bitcoin in the last 15 years went up 100 million times. Gold in total in the last 15 years went up 3 times. So compare that, right? And he did it, most of this growth was actually in the last 2 years or year, when he went really crazy, and he went up a ridiculous, stupid amount that is 2 pair, So Bitcoin has done that, in a year sometime. It went up 2, 3, 4, 10 times in a year. So, of course, in that case, the price then, if Bitcoin doesn't follow, and eventually follows, but right now it doesn't follow because, for whatever reason, geopolitical reason, etc., these nations are buying gold, is already correcting. You will see that the price relatively to gold, for Bitcoin, needs to compensate for that factor too. So it touches that support line, but we never say that support line is also valid for gold. It's just the scaling behavior, changes of 10, 100,000. We always mention it as a useful for the one in dollar, simply because it probably has to do, there has very strong indication it has to do with the cost of production of Bitcoin. And the cost of production of Bitcoin is paid in dollars, it's not paid in gold. People don't pay electricity in gold, they pay it in dollars. That's why it's valid for the model when it's expressed in dollars, but it's not valid for the gold. We never say, hey, that gold support line is meaningful. It's some interpretation of some people that are coming up with excuses, to not to understand again how this works. But yeah, so it's not problematic. And even there, we barely touched it, and we are not going below it, because, I don't see gold gaining factor of 4, 5, 10 relatively to Bitcoin. It's not going to happen. Bitcoin probably is going to catch up anyway, very soon. So yeah, it's not good. If anything, the power law is stronger than ever. So I don't understand when people say that. Please, trying to understand, go back, study more, study the power law, because that is not the case at all. It's the opposite. Okay. Yes, we were late, and it was my fault. I was talking too much. Let's see. Yeah, somebody's asking me to do all these things. These are actually, it's an interesting question because I do want to cover some of this topic in my X, mostly because I think we have very strong connections with Bitcoin. Like if we can extend life, we can enjoy Bitcoin more. AI is very relevant. At a certain point, I think AIs will start to trade with each other using Bitcoin. So these are all very interesting topics, and we can explore them. So thank you for the suggestion. So this question is also for me. There was. I like this Hendrik Z is actually one of these very honest researchers that always give the right attributions, and he actually tries to verify results from the power laws. So he's replicating some of my results. Maybe next time we can discuss these returns. I did all this study focusing on, instead of the price, on the returns, that is changes in price. So it's another very subtle measure to see if we are still behaving along the power law. So far, yes. And he kind of added, I wanted to verify what he was saying, something about the AV tails. That I think the AV tails, that is what produces these large changes all of a sudden, 5-10%. You were saying that they became smaller, but we need to double check that. So you get some compliments, Marcos. Everybody saying that they like you're looking for a real question. So comment that says movement. Yeah. So once you start to have tools like these, and I'm also mentioning how people can learn how to do cover calls. Because look, we don't care. We do this. Sure, we are a business. So we develop products. We are proud of our product, but at the same time, we are Bitcoiners, so we want to see other Bitcoiners successful. So my position, and I don't know what you guys think, I think we are aligned on this, is that we are not anymore in a place where all hodling is enough for the majority of people. Maybe if you have 2,000 Bitcoins, okay, all what you have to do is hodl. You are already set anyway. But if you have a 0.1 Bitcoin, you're not going to retire. I hate these videos where say retire with 0.1 Bitcoin or retire with 0.01 Bitcoin. These people are scamming you. It's a form of scam because they want your attention and they are telling you BS. So you need to be a little bit more active in how you hodl. I call it hodl plus because you hodl and plus you do something like we are doing, that is basically trading futures using our Bitcoin as collateral. And in that case, you can multiply your Bitcoin. You can bring Bitcoin returns to what they were 10 years ago, 5 years ago. So you can do different things. You can do cover calls. You can use our system, but learn how to do these things. And then once you do that, you don't care if we are going up, down. We know that we go up. This is what Bitcoin has done, and it will continue to do. But and locally, if it goes up, if it goes down, I'm also almost preferring when it goes down because is when actually I can buy cheap Bitcoin. So
awesome.
You guys have anything to say about that?
No, I think it's going to be an interesting end to the year. That's all I can say.
But yeah, I think Giovanni always makes a good point that when you have the tools that can help you in either direction, you don't have fear of the Bitcoin price falling. And I think most people are scared of Bitcoin price falling because they don't have a plan when it does fall. Really.
That's true.
Yeah.
Marcus, you want to answer this question?
The time frame that we were looking at is the daily, so we can get a big picture perspective. And then Costa was he drilled down to the 15-minute to show you the algorithm operating inside of that daily time frame. So, yeah.
Okay, and good point on the gold. Yeah, I think so. These are good tools. It's really cool that we see all these power laws. Remember what the power law is about. It's telling us that as we change the scale of price, so factors of 10, so 10, 100, etc., we need also to change the scale of price of time. That is really what the power law is all about. Now, all the additional things, like the this very interesting support that is seems never violated with the dollar, or the decay, etc. These are important, but are additional things, are not fundamental. They can still be used. Like when we trade, for example, yes, you can set your liquidation level of the support line, but it's just a point of reference, right? If you want it to be even more conservative, you can say I want to be 20% below that. So yeah, it's better than flying dark and not knowing what will happen, right? If you don't know that, then you think, oh, we can go 1 million in a month from now, or we can go to zero in 3 months from now. No, the power law tells you it's impossible, that these kind of things happen in these time frames.
Yeah.
Anyway, and then we have this question. No, because we are trading right now. I'm trading right now. I'm using the algo. I'm doing cover calls. I'm doing all these things. I will say in general not to worry too much, and maybe Marcos can say something much more eloquent about that. The market, I think the market has its own rhythm and has its own logic, and many people often associate things that happen to the market. They say, oh, this happened because of this event, right? But usually it's kind of a way around, the other way around. And many things happen when nothing happens. It's outside, right? We don't need some decision from the Fed to change the market. It happens all the time. And maybe sometimes happens because we made some decisions, but it maybe doesn't much happen. Sometimes happen the opposite, like they cut interest rate and the market goes down anyway. So I rather look at the data from the market than outside the market. What do you think, Marcus?
Yeah, I think these are contributory factors. I mean, they are would contribute. They might create tailwinds or headwinds, but like you said, all we can do is look at the evidence of what has happened. We can't really predict what's going to happen and what impacts these things will have. But yeah, I think it will be a contributory, but it's not something that you should be holding your breath over. Yeah.
And that is good because then you don't, basically, look, it's like, I don't know if you like this analogy, Marcus, because you make the best analogies in the world. But it's almost like you watch outside and you say, hey, is it raining? Okay, maybe it's a good idea to bring the umbrella, right? Is it sun? Where maybe we should not go out with this weather, Now it's possible that you go out without an umbrella and it rains, but the best you can do is to look at whatever is happening and be aware of your environment,
But to add to what you're saying, the umbrella can cause the rain.
Yes.
So, yeah.
Exactly.
So,
Exactly. All right. I think we cover a lot.
Yeah, I think it's going to be really interesting.
There's a nice comment about the A team. Yes.
The A team is back.
The A team is back.
The starters are back.
Right. Okay. I think it was a nice comeback, and we will be back next time.
We'll do same time, Giovanni. Right? This worked.
Yeah, let's do it at the same time. I think it's good time.
Yeah, lock it in.
Is it good for you, Marcus? You like this time?
Yeah, it's very good.
Good.
Yep.
All right, guys. We will be back next time. We will try to be
fantastic.
regular. Okay. Awesome. Bye, everybody.
Hey, everyone.
See y'all.